You know, the crypto market, it never sleeps, but you have to. And that's the powerful promise behind AI trading bots, right? These automated machines that could, in theory, generate passive income for you around the clock. But is this actually the future of investing, or is it just some kind of high-tech fantasy? Let's break it all down.
This is the line. This is the sales pitch you see everywhere. And man, it is seductive, isn't it? I mean, the whole idea of a tireless machine just working for you, navigating the pure chaos of the crypto markets to pull in profits while you're at the gym or with your family or even fast asleep. It's the absolute dream of passive income.
And there it is. That's the critical question we have to ask. Because anytime something sounds this good, especially in the world of finance and crypto, you just have to look under the hood and see what's really going on. So first, let's just dig into why this idea is so incredibly tempting. What is it about automation that gets traders so excited?
Okay, the appeal here is just undeniable. I mean, think about it. The crypto market never ever closes, but you need to sleep. A bot doesn't. A bot can execute a trade in a millisecond, way faster than you can even log into your account. And maybe the biggest selling point of all, it has zero emotion. It doesn't feel that fear or greed that just wrecks so many human traders. Nope, it just follows the rules, crunching massive amounts of data in real time. This is the ultimate hands-off dream.
But what about the tech itself? You know, that term AI gets thrown around constantly. What does it actually mean when we're talking about these bots? It's time to separate the marketing hype from the cold, hard reality. And this right here, this highlights a huge disconnect. The marketing guys will use these flashy, futuristic terms like quantum AI, but a lot of the time, what's really running underneath is just simple, rule-based automation. A platform might shout about its AI-enhanced predictions, when in reality, it's just a tool to help you test your own trading ideas against old data. So the crucial takeaway here is that not all AI is the real deal. Okay, so in theory, a true AI-powered bot is adaptive. It's supposed to use machine learning to actually learn from market data. It might use sentiment analysis, literally scanning social media and news to gauge the market's mood. And then it's supposed to adjust its strategy on the fly. It's designed to evolve. Now, in contrast, most of the bots you'll find out there are rule-based. They just follow very strict if this, then that commands. You know, something like, if the price of Bitcoin crosses this specific line on the chart, then buy. They're predictable and they can be great in stable markets, but they can get completely wiped out when something unexpected happens because they just can't adapt. So what do these platforms actually look like in the wild? Let's take a quick tour of the different kinds of bots you're going to run into. And as you can see, there's a whole range of options. On one end of the spectrum, you've got something like BitStrategy, promising a totally hands-off, fully managed experience. Then there's Pionex, which is cool because it builds the bots right into its exchange, so it's super simple. CryptoHopper is more like a marketplace where you can test or even buy strategies from other, more experienced traders. And then on the far end, a tool like Trade Ideas, well, it isn't even a bot at all. It's an AI that just gives you trading signals for you to act on. So yeah, the level of automation varies a lot. And what about the cost? So many of these bots are advertised as free, but listen, there's almost always a catch. The platform might take a tiny slice of every single trade, or they'll lock their best features behind a monthly subscription. Or maybe they charge you to access the top performing strategies. That free part is usually just enough to get you in the door. Okay, we've seen the promise, we've seen the players, now we're at the most important part of this whole breakdown, the reality check. Let's talk about the very, very real risks involved here.
Just take a look at this number, $300 million. What do you think that represents?
That's the estimated amount of crypto that's been stolen by hackers who got their hands on users' API keys. Now, these keys are basically the digital handshake between the bot and your exchange account. If a hacker gets your key, they probably can't withdraw your funds directly, but they can do some crazy stuff, like force your account to buy a worthless coin to pump its price, and it effectively drains your balance. It is a massive security blind spot. And honestly, security is just the tip of the iceberg. The biggest misunderstanding people have is that automation gets rid of risk. It absolutely does not. The market can still crash. The AI itself can have flaws. During a black swan event that it's never seen before, a so-called black box algorithm can make some truly bizarre, irrational trades. And just like any strategy, an AI's model can get outdated and just stop working if it isn't constantly retrained and updated. This is so far from a risk-free game. So let's be crystal clear about this. If any bot, any platform, or any influencer out there ever guarantees you profits, you should run. Run in the other direction. That is the single biggest red flag you can possibly see. Legitimate tools do not make guarantees, because in trading, there are none, period. So after all that, is there a smart way to even approach this? Yes, absolutely. But if you're going to explore these tools, you need a solid framework for doing it cautiously and intelligently.
All right, if you're going to do this, here's the smart playbook. First, stick to non-custodial platforms. All that means is your crypto always stays in your account on your exchange. Second, you have to lock down your API keys. That means trade-only permissions, two-factor authentication, and IP whitelisting. Third, and this is so important, always test a strategy with fake money first. Once you go live, start with an amount you'd be totally okay with losing. And finally, you have to monitor the bot. This is not a set-and-forget money-printing machine. It's a tool that requires your constant supervision.
Look, if you remember just one thing from this entire explainer, please make it this. These bots are not a replacement for your own knowledge and your own judgment. They are powerful tools designed to assist your strategy, to execute it faster and more efficiently than you ever could on your own. Think of it like a scalpel, not a magic wand.
And that really brings us to our final thought. An AI can be programmed to execute a strategy with perfect emotionless discipline. That's true. But the strategy itself, the risk management, the very decision to even be in the market, that still comes from you. An AI can follow the rules of the game flawlessly, but can it ever truly replace your judgment in deciding which game to play in the first place? That's something to really think about.